Hi there, I'm Timothy Pope with your daily look at the stock markets. Chinese mainland markets dipped today. There was a little bit of profit taking after yesterday's gains. The Shanghai Composite Index shed 0.7%, the Shenzhen component 0.6%. This reinforces the notion that the markets are currently range-bound because there was quite a bit of good news in yesterday's economic data. It just wasn't enough to give A-shares the breakout moment that they need right now. Property stocks were a drag all session once again. A sub-index tracking the sector closed the day down 1.7%. China Vanke, which has been at the centre of recent government efforts to support the real estate sector, was down 1.2%. And another big player in the industry, Poly Developments, was down almost 2%. The big story around the region was, of course, Japan, where the BOJ ended 8 years of negative interest rates today and also wound up other quantitative easing measures like bond yield curve controls and asset purchases of things like ETFs. It's also the first time since 2007 that the BOJ has delivered a rate rise. But Japanese interest rates, while no longer negative, will still be very low, just 0 to 0.1%, and that pushed the yen lower. While the markets had been expecting the rates move, it was widely reported ahead of time in international and Japanese media, it did shake the markets up when it was announced, and the Nikkei 225 had a pretty volatile session. However, it managed to close 0.7% higher, back above 40,000 points.